Ramakrishnan has written to us saying, how would fund reclassification impact existing investors? Do you see any negative impact?
Yeah, I see quite a few impact, and some of them will be negative. One is that, existing investors, some funds will merge with other, because some fund companies have many similar kind of fund, and that was the rationale, that was the reason why SEBI wanted to standardize the classification. So one fund company which has two balanced fund, if it will become a very big fund, because if you have two balanced fund, they have been forced to merge it. Once they merge it, it will become very large, and there is a problem of very large funds, funds which are very large, because it's called winner's curse. You do well, you get more money, and once you get more money, it gets hard to deploy or do well for the reason that why you are doing well. And it could be particularly counterproductive in certain strategies. For example, the small cap funds or the mid cap funds, if they become very big, the reason why those funds succeeded in the first place is that they were able to, assuming that there is a 500 crore fund, and it built a portfolio of 25 stocks, and it had to buy 20 crore worth of each stock to be diversified. And buying a stock, small company worth 20 crore is not hard. But then as you get bigger, even if you, and spotting those companies and they do well and the fund does well and your small cap fund becomes a blockbuster. And as it becomes a blockbuster, more people pour money into it. And then now you have to look for 40 stocks, because you can't buy those kind of companies in large quantities. Indian markets lack the depth. And if you have to look for 40 such ideas instead of 20 now, as you turn from 500 crore to 1000 crore, and when they become 10,000 crore, it becomes very difficult for them, and then it becomes a portfolio of a very long tail. It will have some large position. They will have to worry about the liquidity. So it could be it could be an advantage in many categories. For example, large cap funds will not have this problem. They can still build a portfolio of 40 stocks, and the portfolio could be very big, some 50-70,000 crore of portfolio of a fund with 50-70,000 crore rupees can still be well managed. It will have the liquidity. Big companies have that kind of liquidity. You can sell a position of 100-200 crore any day without making any meaningful impact. So some fund, and that will trigger economies of scale. So small cap funds, mid cap funds, some of the balanced funds, which will turn very big, will be something to watch out for. Other thing will be, there will be a small disadvantage if, as a result of, some funds will actually change their context. Some funds will, you bought a mid cap fund, and now it is going to be become a multi cap fund, because the fund manager chose that this will turn out better qualify as one. So and you want a mid cap fund, so you will be forced to sell and move elsewhere. That can trigger a short term capital gains, so you will have to do that planning yourself. Either settle with that fund till it gets older, stop your new money pouring into it. But apart from that, I don't see too many changes of that kind. Funds becoming big, and some funds becoming too big, and they will have disadvantage. These are two things to watch out for.